So I just want to do a talk about on when the trend turns bearish. I'm not suggesting that we're there yet, but we're very darn close to the market, having a change in direction, I think, especially if this continues to heat up and maybe the damage is already done. We may not be able to recover from this. Even if they did decide to come to terms, it might be too late, and the market already is pulling. The companies already, their financials are going to be affected by the tariffs and everything that have been in place and the stop of trade and such. So this is now in a downtrending channel. So the trend has changed. This is a downtrending channel. Now, I'm not suggesting it's going to keep going, but I wouldn't be surprised. And a couple of things that really, just going to want to give a bit of a broader overlook on this. One of the things that twigs me that there's few things that are twigging me that we're going lower. Trannies breaking down. They never did match or confirm the breakout moves of the other indices. It's imperative. In the Dow theory, Dow trannies have to confirm the Dow move, and it never did. And now breaking down. So there's a negative divergence there and looks to trade lower. That's the one thing. The other big indicator for me is the price of oil. This is a major sell-off on oil. Price of oil. Let's see what oil is doing here today. Just looking for a price. I just pulled this up. This is just off the internet. This is the 1-year chart, and oil back when at the bottom of the bear traded down to 42.5, and it did get up as high as 65, and I thought this was headed to 70, but the market changed its mind. Now it's coming off sharply. We can see crude is at 58 and selling off very, very sharply. So this is, and this is, as I said, a harbinger of things to come. These are big leading indicators: the price of oil, price of copper, because they're what runs the global economy. And if they're selling off, it means people aren't anticipating that they're going to need them, which means that we get a big slowdown in the world economies. So we get these. So we're getting this big sell-off in the marketplace as the financials of companies are going to be affected. So what does that all mean? Well, what it means is that I have a short list here. And this is also a very good indicator. Look at this short list. It's nothing but red, except the odd one, up 0.06%. Here's one up close to 0.2%, up 0.7%. Yet, many of them there we go. YGYI down 10%. CINA, which we were talking about the last couple of days, is off 10%. So all big drops, but the biggest problem that we have with when there's a change of direction and the market turns bearish is that the volume also dries up, and that's one of the reasons. And so these stocks, they just tend to free fall. But you can see 240,000, 77,000. Now AEO 2 million, but 100,000, 80,000, 10,000, 190,000, 140,000. So here we are, a good way through the day, and there's no volume in any of these stocks. But look at these charts that I've pulled up for shorts. Just quickly run through them. I mean, they're ugly charts. So we're not looking to short strong charts in a bad market. We're looking to short weak stocks in a bad market. Bad being a relative terms. If you're a bull, problem is there. People tend to be bullish, and so we coach the market heading lower in terms of bad, when in effect it's neither bad nor good. It's just going down. So if the market is bearish, let's recategorize that rather than bad. If the market is bearish, we're looking to short ugly charts, bearish charts, not strong charts, not bullish charts. But you can see all these charts. I mean, they're just absolute garbage. This is my favorite bid. We were short this at 25, and we did cover when it consolidated through here. But look at it now, 983. It's going to zero. This is the other beauty. This one's CC from 55 to 22, and in recent terms from 40 to 22 in a free fall. So we have a lot of stocks that we're looking at shorting. Some of them have gone too far already, like CC. It is falling too much, and we're not going to chase it. Some have already come from $60 to 18 and into an area of support. So there's the easy money's been made on them. So we're not going to look to short those, but we do want to short stocks that have bad, ugly looking charts from a bull's point of view, and weak charts into a weak market. We're not looking to short strong stocks in a weak market. Some of them still go. Look at AXSM, for example. That's off $1.22 today, but look at this. Look at this chart. This thing. Now, will this be able to withstand a major sell-off? It did in here. Went from 5 to 2, popped, now 24. So obviously the story's changed. We'll just keep long these things, but yeah, so this is not a stock that we'd want to short. But one of the ones that I did talk about shorting today was LB. This was up on earnings and, had a big pop. But this is, from a bull's point of view, this is an ugly chart. It's coming into heavy resistance there. I tried to short it in here at 23.50. It collapsed to 22. I was talking about shorting it in here at 24. We'll see if it can, hold this market pressure. Because consumer cyclical, retail stores in times of contraction in economies, people don't spend money, so retailers should get whacked, and we may see that with stocks like Amazon. Breaking down now. It's down $51. My high of 2,000. It's down $200 in the last month. Down 10%. It's a big move down. Down 51 today. This is cyclical. Consumers are not. These get whacked. People don't spend money if they don't have it. Now, when the market turns back around, they do, because they have pent up demand. But until it does, these kind of stocks, they go lower. So, anyways, that's my. I just wanted to point that out about the short. That we're going to be looking for shorts. We're going to be looking to short weak stocks in a weak market. But the problem is that the volume dries up. So we'll be looking at trading stocks that have less than what we would normally short, or that we would normally trade, volume less than what we would normally trade.